What's good, YouTube, man? It's your boy Trey, and I thought I'd break down a few trades I took from the AM session this morning. I did end up losing about $366 on my funded account, so let's break down the trades I took and let's see where I could, be better for tomorrow and in the future. So coming in into the morning, right? I'm bullish. I'm already bullish. I'm expecting price to run these highs here and these highs here. This is a 4 hour. This is what the daily looks like. So I'm still bullish. So when I drop down to the 1 hour, I do see these equal highs. Price did run this high here with like maybe just like a few points maybe. But to me this looked like smooth highs. So that was my drawn liquidity at the time. I did see that, okay, price, we're inside this current dealing range. Yeah, we have this huge dealing range here, right? From this swing low to high. But price is also trading inside this swing high and this swing low's current dealing range, right? We're also trading inside the new week opening gap as well. We're around the consequent encroachment of it. So my thought process, top of the morning was, okay, we are in a premium, and usually like I don't want to be buying in a premium. I really want to be selling in a premium. And so I dropped down to the top my 15-minute time frame, looking to see what's going on. We didn't have that created just yet. I'm not sure. I don't think we did just yet. But I actually ended up taking a early short entry, right? So on this candle here at 9:33 a.m., as you can see, we took out. Let me go back. Where is it at? I think the London high was here. Where was it at? Hold on. 1 second, chat. Yeah, okay. So we took out the London high here, right, at 9:33 a.m. This high here was the London high from the overnight session. And you see on ES, we didn't take it out just yet. We took it out now, obviously, but if you look at the candles, right, let me go down to let's just say like a 5 minute. You see on the 5 minute, we ran above that high. It was very shallow though, but we ran above it, as you can see there. Picks it up. As you can see, we ran above that high. But on ES, we didn't run above that high with that candle. So I figured that would be like a higher time frame S&T. So what I did was, and this was the mistake I made, right? What I did was I dropped down to a 30-second time frame and seen, okay, let's get rid of this gap here. Price had inverted this bullish fair value gap there. We also had a market structure shift lower here. And we also had to change in step delivery here. So I went short here at this candle here, and my target was somewhere. I was targeting maybe like these lows here, some quick and easy. I didn't feel too confident about this setup. I didn't feel too confident, but I knew that it doesn't matter really. It matters about what the market is showing me and telling me. So I ended up taking this short here. My stop loss ended up getting hit. So then I thought to myself, I'm like, okay, we are in a premium. I really don't want to be buying in a premium though. But you can in some cases. It just depends on the drawn liquidity and depending on your level of experience. You feel me? So I know sometimes I'll buy in a premium and I'll short in a discount. It just depends on what the market is looking like at the time and the drawn liquidity, like I just said. But in this case here, I seen that price. We traded higher. We were respecting these fair value gaps here. We had a run on stops lower here with this minor run lower. We had institutional order flow entry drill inside this gap right there. As you can see, move that out the way. Zoom in just a little bit. That's the institutional order flow entry drill. We ran it just a little bit, as you can see right there, right? I'm looking at this screen as well too, so my bad. But you can see we ran it right there. So what I did was I dropped down to the 30-second again, and I seen, okay, this was obviously a run on stops. You got the institutional order flow entry drill. Price traded above these consecutive down close candles. So I went long there at the order block there. Once that change in step delivery happened, I went long, and I started to see price just begin to consolidate. and we put in this swing low, and I figured, okay, if price is really going to go higher from here, and like I said, you don't really want to be buying in a premium, but in this case I did, and you see, you feel me, I paid for it, you feel me? So I went long here. I did move my stop loss below this swing low here, so I actually ended up taking a break even on this trade. And I was just watching price. I'm like, okay, what does price want to do then? Because we have equal highs here. I think that could be a potential target, right? Let me zoom out. We got the equal highs here. That could be a potential target. But on ES, we had these lows, these equal lows. So I'm like, okay, this isn't going to be high probability for the most part. I already know that if there's like equal highs and equal lows resting on both sides of the marketplace, usually, not every time, but from my experience, usually the market will go into a high resistant market condition, and it definitely did. It definitely did. So I did see my exact model play out to the T, right? But I already had took one loss and took a break even, and I did give myself the permission. I'm like, okay, I'm okay with taking one more trade, just making sure my risk isn't, as large as my other positions, and just take what the market give me for the most part. So I seen that we had this inversion fair value gap, we had this change in the step delivery here, and I thought about taking a short here, but I was like, I'm bullish on price though. I'm bullish based on the higher time frame. We were in a premium, so the short was, perfect. The short scenario would have been perfect as long as you know when to take profits and stuff like that. The short scenario was perfect, but as you can see, we have the inversion fair value gap here. We had the change in the step delivery here. Price came back up into that order block, this bearish fair value gap, and that inversion fair value gap, and targeted the opening range gap consequent. The opening range gap damn, I can't say the word, bro. Fuck. The opening range gap consequent encroachment, and we targeted the low as well. If I can pull that up for you, I really want to show you real quick. Hold on. Okay, here. So this indicator here, the new week opening gap, new day opening gap, regular trading hours and stuff like that. This is the opening range gap of the session. So you see price delivered all the way into the consequent encroachment of the opening range gap and the low, and the midnight opening price was somewhere around here, so that would have been a good target as well. We were also above the midnight opening price, so this setup was like A+ for me. I just was stuck on that bullish bias, and usually I'm not like that, but as I'm transitioning into becoming a consistently profitable trader, and now that I'm a funded trader, I'm looking to take more setups that make sense to me, at least. Sometimes, like I said, some setups I still may get wrong. I may call price action wrong, but to me at least, you feel me? So I'm like, okay, this looks perfect, this looks clear, but I'm okay with missing this, because once we trade inside this bullish, right? We had this bullish 15 minute fair value gap, and I was expecting price to trade higher from this gap. That's why I waited, you know what I mean? But looking at this range here, the equilibrium is right here, right? We also had this small little gap here as well. So we were in a premium. Price went from premium to equilibrium to discount. That's how price normally trades for the most part. That's all you see price doing, you know what I mean? Premium to equilibrium to discount, discount to equilibrium to premium. So I know that, right? Price traded from this bullish fair value gap. We traded higher, and I dropped down to the 2 minute time frame. Well, the 1 minute time frame. I used all of them for the most part: 2 minute, 1 minute, 30 second, 15 second. But in this case, I really should have stuck with, I want to say, the 1 minute. On days like this, you kind of got to know what time frames to use when you're taking entries, because if you enter on a 15 second time frame or a 30 second time frame, the narrative can just be a little bit different. It could throw you off a little bit. So once I seen that, okay, on the 2 minute, right, we had this inversion fair value gap. Now I'm not just taking a short just off the inversion fair value gap. I have to see my model play out. So on the 2 minute, I seen at the time, right, price was respecting this gap with these two candles here. We also had this change in the step delivery here. Once price traded above that, this became a mitigation block. We didn't take out the low of here, so this became a mitigation block. I took the entry here at these consecutive down close candles and inside this inversion fair value gap, and I targeted I was really targeting the equal highs here. So price began to push higher, and I moved my stop loss above here. I put my stop loss here, and a few seconds later price came down and hit my stop loss, and that was really it on the day. So just feel like I could have been a little bit more patient and a little bit more selective on, you know, where I would want to enter in at based on my current dealing range. Yeah, I know we're in a premium, so I just made a tiny little mistake today. I should have been a little bit more patient. After the 9:30 opening bell opened, I should have waited just about 15-20 minutes, maybe to that 10 o'clock a.m. candle opened. I usually do wait for the 10 a.m. candle, but I'm starting to see that my model forms. It can happen during the opening bell, maybe like a few minutes after, or it can happen after the 10 a.m. open. So yeah, man, like I said, I could have been a little bit more patient, just a little bit more selective, and we'll just take that loss for the day. Like I said, walk away on these 2 L's and call it a day. Being able to walk away is a skill set too. Not too many people talk about. So I may make a video on that, being able to walk away, and that doesn't just relate to trading. That relates to anything like outside of trading. So if you're new to the channel and you enjoyed that breakdown, make sure you leave a like, make sure you subscribe. I'll see you guys tomorrow, and I'm going to try my best to be as consistent as possible with these type videos, because these videos help me out and I know they help others out. So yeah.